everybody. Welcome to the Trading Market Technicals morning call video for Wednesday, July 18th. We did have our update pushed us out of this band up in here, but while Ben Bernanke was speaking and testifying, market sold off pretty hard. Sold off, took out the previous day's low. Basically, no hint of extension of QE3. However, the market started anticipating that Ben Bernanke will be giving some sort of stimulus to the economy, so the markets rallied into the close, making new highs. Now, kind of a crazy market here, so I wouldn't read too much into it. And we are also in the summer doldrums, which we have volume, which is extremely light. So markets can swerve and sway and push markets one way or the other relatively easy. Now, although we did go higher yesterday, our industrials and S&P move the markets higher. Not really what I want to see. I like to see them follow the leaders, such as the Russell and the transportation sector, which I'm going to show you. So not really a healthy rally, which I like to see. That doesn't mean we can't get up to that 1390 area, 1400, like I mentioned. But I would be using caution over here, and I'll get into that in a minute. Despite the rally we had, I started breaking down. I started looking at what was rallying. Well, we had 49 stocks that hit, that broke out of the S&P, hit two new 52-week highs. 29 of them were defensive. Okay, 8 were the REITs, which is a subsector of defensive, which is a subsector of a defensive in nature. We also had a XLV, very, very hot. I mean, it's at its highest level since it launched the ETF. So the point I'm trying to make is that if we're bullish on the way up, we shouldn't have defensive stocks and sectors keep rallying. So what happens is that you have these investors and traders flock to these areas just in case something does happen down the road. They kind of weather the storm. They kind of park their money. So that's something that I really don't want to see. As far as sentiment's concerned, I'm going to show that to you as well. We had our put-call ratio dropping again, so that means that we have a lot of complacent investors. Okay, so that's sort of a contrarian here. So that's something that that's concerning as well. Okay, there's a lot of mixed signals, a lot of cracks that are still apparent in this market. So we'd want to really trade what we see. We want to make sure that our stops are in place, and of course, if there is some sort of a hiccup in the road, don't get stubborn. Really try to get out and really understand what type of trader that you are or investor. If you are a swing trader and you want to ride out the storm, I would say next push up would be really prudent to put on some hedges if you want to keep your longs. So just keep that in mind going forward. Okay, so let's kind of move into the charts here. As you can see, we had our range bound 5 points in the SPY. We did break low here, and then it held that 200 period moving average. Okay, which I like using during the day because it really is some sort of a kind of magnet, sort of like a VWAP. And then we rallied all the way up into the close. Now we broke out of this area. That doesn't mean it's sustainable. We're down about 3 right now in the minis. So just kind of keep that in mind. Okay. All right. So let's get into some indicators. NYMO not doing much here. Up 23. Really to really get going, I'd love to see us get either oversold or oversold here or overbought, one of the two, and then really try to take some sort of a positioning on here. But take a look at the put call, like I was telling you. Big drop lower. Lower highs, lower highs, lower highs, lower highs. You start getting down to this area here, you have to really be cautious. Okay, once that does happen, you usually get some sort of a market sell-off. So I want everybody to be cautioned here. Use your caution wisely. Make sure that if you are holding a lot of longs, you may want to put some sort of a hedge on. Bar chart momentum index, again, right in this area, not really telling us much. So our daily indicators aren't really doing much. But what I want to show you now, you'll understand where I'm coming from as far as using caution. Now, we have our double bottom. But look what happened here 2 days ago. 3 days up, wiped it right down. Remember I said, oh, wow, although it looks encouraging, it looks like just a bear flag. And sure enough, we sold off, took 3 days out in one day. Not good. Not healthy at all, and especially China slowing. And now they're talking about a soft landing, and they have bottomed. I have yet to really see that, and I don't believe that at all, at least at the moment. Okay, now what I want to get into is I want to show you this risk-off thing. Recent underperformance of small cap raises concerns that bullish conviction remains absent. Sure it does. Now, if you look at this, this is not what we want to see, right? We want risk-on rally. We want this Russell leading the S&P, not lagging the S&P. So that's something another indicator that I wanted to really point out. Now let's go into some of our. I pointed this out a few weeks back, and I want to really address this again. S&P versus the transportation sector. The transports are leaders. S&P, we don't want to see the S&P lead the transportation sector. Okay, so this is not a good sign here. Really not a good sign of possible things to come. Okay, really we need to keep an eye on this, and this actually needs to continue. Remember, we had our double top here in the transports, sold off, and as you can see here, really can't find footing. Although it is making higher high here. My worry is that if we lose this little trend here, market plunges, you're going to see the transports take everything else down with it. Okay, semis. Intel reported worse than expected numbers. Not good for the semiconductor. Again, you can't have the transports and the semis lag and have the S&P rally, because it will get capped. At one point in time, this market will get capped and will start to sell off. Okay, as you can see, our ratio chart here, S&P clearly leading the semis, and the semiconductors have gotten decimated in the last 8-9 sessions. And Intel, at one point in time, is no help at all. Now, can we get some sort of a relief bounce? Absolutely, because we are oversold, but oversold is not a buy signal. So just keep that in mind. Banks. Let's take a look at the banks real quick. Now, banks did do well. Goldman Sachs, Citibank, J.P. Morgan, as you know, they all reported. They had some decent numbers. So one shining light here is that maybe the banks hold in, transports doesn't sell off, and then the transports rally and bring everything else with it. So that's another good spot that I wanted to show everybody. Okay, so just keep that in mind. Last one, let's take a look at copper. And copper here, again, not a good barometer of what of basically internals of health. We're rallying, S&P is rallying, and copper really lagging. And again, we had copper lag yesterday, transportation lag yesterday. Of course, we had the semis lag yesterday. So all key components that make a healthy market are lagging the S&P, and that's not what we want. Okay, so I just want everybody to use caution. What a lot of people ask, you know, what are you doing? I'm day trading. I'm trading. If I don't see anything, I don't trade. That's the bottom line. And the markets will turn. We are in a summer doldrum, so patience is needed. If you pick off 3, 4, 5 trades, 2 trades, you know, and you made money on 3 of the 5, hey, fantastic. That's all you need right now, you know, to put money in your pocket. No sense to overtrade. You know, manage your risk properly, and then once you see it's obvious, then you jump in. But other than that, you know, look for a move higher, and I would be definitely putting some hedges on, especially on the next move up if we do get it. So we're down small today. We'll see what happens. Let's go into the index charts. Spiders, as you can see here, nice move up, 20, 50, 200. Nice. We just had a little move higher. Now the MACDs are curling again, so push higher on some decent volume, as you can see here. So this is encouraging, but what's not encouraging is that the S&P is leading. And the Dow is leading. Look at the diamonds here. Same thing. Okay, encouraging. But this is, I don't want to see this. I want to see the transports, the semis. I want to see the banks lead. I want to see defensive names actually start to sell off a little bit, where money's coming out of the defensive sectors and into some risk-on assets, higher yielding currencies, so to speak. But this is not what I want to see. Okay, transports, and here's what perfect example. Can't break this downtrend line. Transportation sector. I got the arrows here. 4 times we tried to break it and we failed. So again, another note of caution. I'm not running out looking to sell the market right up here, but I am cautious of the market moving higher, and we'll have plenty of opportunity to short the market, guys. So don't look to pick a top because it's dangerous to your wealth. Okay, and last one, IWMs. Now, look what happened with the IWMs. Although it did break out, it closed right on the line. It fell back in again. It is somewhat encouraging, better than what we saw. But, again, I'd like to see us pick up in a little bit of volume. We had more selling come in at the end of the day. Again, not good. So just keep that in mind going into today. Ben Bernanke is speaking again, day 2 of his testimony. So anything can happen, guys. Keep in mind. Don't forget, Intel came out with some negative numbers. Let's see if the semis can shake that off and rally. At one point in time, they're going to be a good candidate to look for some sort of buys. Look for a market buy in that sector. Okay? All right, guys, have a great day, and we'll talk to you tomorrow. Take care.